Good day, everyone. This is Mark Leibovit of the Leibovit VR Gold Letter, which is the best opportunities in metals, guns, and energy markets. And we're going to highlight a few situations here on this video update this weekend. The first chart we're going to look at is the chart of crude oil. There's been a lot of discussion about that, and we haven't covered that here as much detail as I would have liked in recent months. The big high, if you recall, was way back in 2008, where we got up to about $146 a barrel. In a few months, we dropped down to the $40 level. So certainly, there's been a precedent for considerable volatility. The blue line is your 50-month moving average. So what I'm going to point out here essentially is if you get too much above it, as you did here, or too much below it, as you did here, too much above it here, you tend to revert back to it. Where we are now, well, we're just under $80 a barrel. I wouldn't call this a super extreme, but the lower you go, the greater the probability it's going to rally back up to that level. And that level now is around $94 a barrel. One of the things I'm looking at is a 533 stochastic, which is essentially a momentum indicator. It's starting to get a little oversold here. So ideally, this turns up. We get one of these little green arrows here that indicate a positive volume coming back into the market, and then we can start talking about some sense of a bottom, whether we're going to get way down here to the 40s or we're going to stop just shy of where we're at now. We don't know, but we are monitoring it. But the most recent volume was negative here, which came in the summer in July. Let's take a look at silver here. This is an interesting chart, and this is silver versus the Dow Transports. The blue line is the Dow Transports, and silver is this reddish line going lower. What I'm going to point out here is the extreme divergence between the two. Back in 2011, silver was way up here at $49 an ounce, and the Dow Transports were way down here. So there was a big divergence at that time, and essentially they converged. Now have gone the other way. So again, this is almost like reverting back to the mean. You've got a big extreme here with silver way down here, transports way up here, and something has to give, and what will happen is they're going to converge. Silver is going to take off, transports down, and you're going to sense a more reasonable pricing for the metal, whether it bottoms here or silver goes a bit lower down to more extreme levels. Certainly anything is possible. Back in 2008 and 9, we saw silver get down under $10 an ounce. Anything is possible, but just keep in mind you've got a big divergence underway here, and that sets the stage for a big reversal. As far as silver, looking at my volume chart here, we can take a look at it here. Again, way below the 50-month moving average, indicating that this is your potential once we start going back to the upside, back into the mid-20s. No sign of a turn quite yet, but we are at a big extreme, so we're keeping an eye on it. We did see some positive volume, which I reported to you 3-4 months ago, but obviously it was a short-term aberration, and we are watching. As far as gold is concerned, I guess we can put up GLD, which is widely followed, which is your ETF, the Spider Gold Trust. And similar situation, you're under your 50-month moving average, you're a bit oversold here, but no clear sign of a turn, and certainly can go to a greater extreme, and so we'll have to wait for some further confirmation here. But as you have probably already sensed, sentiment is running at a big extreme. Looking briefly at the gold shares, let's put the GDXJ, which is the junior miners, on the screen. And as you can see, a huge discount here with the stock, that is ETF, had traded up into the 150s, 160s here back in 2011, now down into the mid-20s. No clear sign of a bottom, but well below the, this is a 50-month moving average into the 80s, so we're getting way extreme here, and again, setting up the possibility for a big turn, but I'm going to wait for volume and some momentum indicators to confirm that. So that's a brief summary of what's happening this weekend, and we'll get back to you on our next report. Thanks for checking in. This is Mark Leibovit, and you are looking at the Leibovit VR Gold Letter video report for October 31st.